Hello, how's it going? Welcome to the mentfx Private Mentorship. This is webinar 172, and what a pleasure it is to be here in front of all of you on this beautiful weekend. Hope you guys are very good. I said 12 in the chat. Oh no, are you serious? I did. That is on me, but that's okay, because we sent the link out, so it's all right. It happens. That's on me. I'll do a little reply. That was meant to be 11 a.m. Thank you guys. That's like 100% on me right there. Yeah, it's all good. So good morning, everybody. Absolute pleasure to be on with a number of you. Really good to see a ton of familiar faces. Hope everyone is doing very well. Elka says Zoom update. I don't see a Zoom update. Morning. What's up, Starboy? Good to see you back here from last week, man. Hope you've been doing well with your personal progress in regards to the stuff you went through before and the stuff you're doing now. You know, a little reminder to yourself and to anybody else that you are very likely to come from any different walk of life, any different background, and in a lot of cases, it's actually very beneficial, right? A lot of the background that you've had has shaped the kind of way that you might think now, has shaped what you take in as good information or as bad information, and may even shape the way that you go about your testing or your actual doing when it comes to doing this thing live, right? Or when it comes to actually doing the data collection. I've seen it time and time again. I've seen it happen to myself. I've seen it happen with others. A lot of the time, you know, taking in a lot of information or a lot of different stuff is shitty, because when it comes to learning something real, you might treat it the same way, and you might still be you might still hold the psychological issue of needing to consistently jump or needing to consistently look to the next bright thing, which is a huge issue for a lot of traders, right? So that's like one side of the coin, where everything is this new bright light. Everything seems like, once you understand that, now everything makes sense, right? Once you get that on your chart, everything's just going to kind of fall together. So that's one issue of the coin, which is just jump to jump to jump. Every bright light is just this new enticement, right? It's like, think about the degenerate gambler at a Vegas casino, right? That gambler is not thinking about his money, about his relationships, about anything in his life. That gambler's thinking about what bright light looks the best, what slot looks the coolest, where is it going to take me next, right? A lot of people get trapped there. And then on another hand, you can go through having gone through multiple things and learning over time that those things do not quite sit well with you, or that they just don't make much sense to you in regards to what you were learning, how you were learning them, or you start to understand that those things maybe made sense in a very, very certain kind of environment, right? So what I mean by that is, and let's talk about a little bit about my own past here for a second. What I mean by that is, I've gone through close to all the stuff that you guys can imagine out there. Now, some of you might be new and just kind of found mentfx, in which case, great, good for you. Hopefully you end up staying on here and learning through here. But I've gone through anything you can even imagine, right? And most of the stuff that I've gone through and learned, what I found is that some of it holds merit and some of it is actually quite good and can be used for profitability. But a lot of it, especially the stuff saturated in the space right now, so I never name names or conceptual names or anything like that, because I don't see the need to. But anyone that's done this knows, for the most part, a lot of it is very limited. And a lot of times you end up limited to an extremely, let's say, lower time frame, or else the thing completely falls apart, right? Because a lot of the time, the things that you're learning or the things that you're being taught to look for don't occur in a way that is consistent across anything scalable or anything higher. It might be something that's consistent and might happen, you know, once a day, once a week on a 5-second, 15-second, 30-second chart. And a lot of the time, even then, it's based on trading into times where theoretically traders shouldn't be trading, right? So a lot of stuff out there, what I noticed for myself very early on is that the limitations set around it are quite large, right? And that it's actually something that I learned even about my own system when I first started finding profitability, right? Using a much, much lower time frame system where I'm like, yeah, this is great. But transitioning this to a real usable, like higher time frame based entry was, well, you would be way too limited. You wouldn't get as much, you wouldn't be able to get as much out of it. You wouldn't be able to even trade as much at all, right? Maybe even like once every year, once every 2 years or something like that. So it's just something I personally noticed. But yeah, back to Starboy, like those things in the past, right? They shape how we go about the future, always. So everything that ends up happening, in a sense, is good, right? Because we get to, in a way, act upon the merits of what has happened before, okay? Rifle says, my man Anton, what's up? First one in a long time catching you on the live. Great, man. I'm really happy to have you here. Loving what you do, brother. Keep them coming. Thank you. Look how they massacred my boy. What was this? Oh, for Zoom? I don't know what Zoom update there is. It looks normal to me. Good morning, Matt. What's up, Shies? And good to see you, man. What's up, Peas Pod, John, Alex? Beautiful. Can I drop some questions into the chat, Anton? Yep, of course. Everyone is free to drop any questions. I don't have anything crazy planned for today. I thought I'd go over just a few of the trades I took this week and maybe look at some things that, you know, I'm maybe keeping an eye on for next week. But for the most part, it's as a day by day. As the day comes, I go and check out stuff on the actual charts. We're gonna make it. I didn't even see the 12 a.m. I just showed up as usual. Good. I'm glad you did, because I got the time wrong. Alex says validation content is amazing. Can't wait for more. Yeah, so I have a few things ready to go in a second. I'm just processing it right now. I'll probably be able to process it after. You can see I just have a few that we can add very, very soon to the portal. So that should be very nice. Most recently, though, as a lot of you know, let me go ahead and open it up. Here we are. As a lot of you know, most recently, here we are. So most recently, we added the full cycle 4 videos. I think I spoke a little bit about this last week, but we were able to finally get them processed, get them added. And these, you know, we decided we're not going to put these publicly just because a lot of the information contained here in regards to how we tested, how we walk through it, it doesn't seem like it's fit for the public YouTube. It just doesn't fit. It seemed like something that would be taken in, let's say, correctly, right? Because a lot of this right here is based on these kind of this prior buildup, and then you get to see all these things put together, and you get to see firsthand how to basically have an actual thought process behind the market movement rather than some random kind of pattern, right? A lot of you guys know firsthand that the markets don't revolve around patterns or around a singular pattern or around getting that pattern right. It really much revolves around understanding how, let's say, the orders are moving into a market. So yeah. Huzaif, I'm really happy to hear, bro. I'm very happy to hear. Okay, so let's get this started. Lplate says, hey guys, a little bit late, but let's go. You sent a little sheet, a collection sheet. Just started my 5-second data spreadsheet. I've taken more trades, but not logged them yet. Okay, I don't have access to it, so let me get some access. Okay, you need to make a copy and then make it accessible for everyone. Thanks for the new perspective. It really helped. Good. So John says, hi, Anton. I started back testing recently, but have concerns about my results. Well, when haven't we, right? That's usually how it's going to go unless you're extremely profitable and everything just makes sense. But okay, so 1. Should I be panicked about my long periods of drawdown? It depends, right? If you haven't collected enough data to know what a normal longer drawdown can look like, then no, because it very much could be just a normal part of the system. It very much could be part of the rules that you follow, and very much could be part of the way that the assets or the market is currently delivering, right? If you haven't ever experienced it, and now you're going into unprecedented levels of drawdown that are more longer term than anything you've ever seen, I wouldn't say you have to be panicked, but the questions would become, like, what's going on? Has it been different? Or has the market just been delivering in a way where, yep, a longer drawdown is more necessary? So it's very likely that the more information you gain, the more data you collect, the more likelihood you have longer periods of drawdown. Because as you have more variables, as you have more variance, you have more periods of potential substantial wins, potential substantial losses, or potential substantial break-evens, okay? So for instance, the more time I spend on this system with this exact equity curve, the longer drawdown you will have over the next 1,000 trades, just because of how math falls. That's just basic variance though. So panic about long periods of drawdown? I think probably not. Is your drawdown such that you are beyond the negative, in the negative, or even losing big time equity, like 30, 40%? Yeah, you can get a little bit panicked about that and focus more on improving that, right? I think you just have to be very fair with yourself. Okay, so you literally have only like 80 trades, 80 to 100 trades. So yeah, this means nothing. This looks completely normal. I don't know why we're worried about this personally. And this is not 15 and 15 trades. This is, if you really think about this, this is around 60 trades of break even. Okay, I think you're missing that, right? I think you're missing that this is basically 60 trades of break even. Whether you took 15 more trades loss here and then won a few, whether you took a bunch of wins, came down, and then took some wins and then came down, doesn't matter. This has been, for the most part, from here to here, has been a drawdown period of around 60 trades. And this might just be the start of that, right? So no, I don't think panicking over long periods of drawdown, especially non-long periods of drawdown, because 13 trades is not a period of drawdown. No, I don't think you should be panicked. 2, is 100 data points good enough to start actualizing my edge on a demo account? You can start actualizing your edge on a demo account at any point. That is as simple as it gets. The earlier you start actualizing your edge with less data, the more likely you're going to make more mistakes in a forward tested demo or forward tested live or whatever it might be, right? Just because of the way it works. The less confidence you have in your system, the more likely you just take trades because, hey, maybe they fit, maybe they don't. I'm not 100% sure, but I really want to start getting results on the board. Well, of course, less confidence, less conviction you have in the trades that you're taking, and as a result, maybe it doesn't go as well. Is 100 data points enough? You tell me, right? I think the fact that the question's being asked, the answer is probably no, because a lot of the time, you know when it's time. But I don't think there's ever a time to start actualizing on a demo. I think you can start actualizing on a demo even earlier, honestly. I don't see anything wrong with actualizing on a demo right now. I've always said that, a version of forward testing should be done just to keep yourself in line with what your system actually delivers like, right? But you're kind of, it sounds like beating yourself up or panicking over 13 trades of drawdown, which I think is a little bit wild, right? 3, I still get confused in ugly context while backtesting. Is this normal? Yep, if you are trading ugly context, then you will be confused in them, right? If you stay out of them, then you won't be as confused. I myself, you might not know this about me, but I myself am very confused when there are ugly contexts, and I tend to divert attention away from them and don't trade them. 4, do I need to eliminate all confusion before going live? Nope. I don't know what the market's going to do most of the time. 95% of the time, I have no idea where the market's going next, how it's going to deliver, and what it's going to do. 5% of the time, the market's doing something along the lines of what I normally expect. It's moving in a way that actually makes sense to me. It's moving in a way that makes sense as per a trend template and as per a delivery of a trend, so I trade it. Okay? Admin says, I have a 1-minute system, and I look for specific things to happen. Most of the sessions I stay out due to not finding the clean setup, even though the market moves without me. Yeah, welcome to Trading 101. There are going to be infinite infinite numbers of markets in your lifetime that will deliver without you that you don't even know of. You're lucky that you don't even know about the markets delivering without you, right? The reality of your life right now is that you maybe watch 1 or 2 markets and watch them move sometimes without you. And right now it sounds like you think that's an issue, right? The reality is you have no idea how many markets are moving without you every single day, right? I'll tell you what right now, as a real kind of proof, okay? Since you're a 1 minute trader, just to really nail this down, every single day you have at minimum likely, or at least every week, at minimum have missed a multi-bagger on this pair and this pair and this pair and this pair and every single pair you see here. Every single pair you see here, you have very likely missed at least one phenomenal opportunity every week. So if you understand that to be true, then your measurement of success shouldn't be whether or not you took the amazing trade on a given pair, right? The measurement of success needs to change and needs to orient to, did I follow the rules that led to a good trade? Right now, if it's the case that last week you were trading NQ and on your 1 minute chart, let's say you missed, I don't know, this MB, this trade, or something here, right? Let's say you missed one of these trades and you missed that trade because you walked away, you were doing something else, you were uncertain, you wanted the price to just prove itself because you really just didn't want to take it at the time, then yes, those are things you need to worry about because, well, you didn't take something that you should have taken, right? If you didn't take a trade, whatever, like here, or wherever it might be, and that was done because you were just kind of scared, then yes, that's a problem. Otherwise, I hate this idea that you missed a move on a given day, that you missed the moves on a market, especially when you get to a lower time frame. You're gonna have a setup every single day for the most part on some asset anywhere. Trying to sit there worrying about the fact that you didn't get in behind it is one of the worst things you can do for yourself, right? To draw an even better example, because I've kind of looked at my own examples a few times, right? Where is it? Okay, I missed this whole move here. All right, I've been watching this. I've been watching it since back here, just so you know. I've had this thing kind of on my list or on some list somewhere, and I've ignored it the entire way through. Why? I have no idea. I just kind of haven't shown up well enough to trade it, and it's just more longer term, so I just haven't taken advantage of it. And that's a move missed. Now, does that change the way I personally have confidence within my system? Does that change whether or not I'm going to be profitable over the long run? No, right? Not at all. Because, well, here's the case, right? If I added in the trades, let me make this smaller so you can see it without my face in the way on the recording. If I added the trades that were possible to take through this, would this curve still go up further than it's been going up? Yes, it would, right? It's as simple as that. Of course, no shit. But I didn't take them. So the curve doesn't necessarily go up a ton, but it's still going up because I'm still following rules. So instead of sitting there worrying about what this curve could have been, if every single day I showed up to the market, I took at least one trade on something that made a big move, which is big special surprise to everyone. A trade maybe every single month is available on a very big level, or every single year minimum on a very big level like this that could have made 30, 40, 100%, whatever it might be on your money. They're going to be missed, and there's nothing wrong with that. But then the big problem is when you get to trading a 1 minute system, which is what you're doing, right? Well, you're going to see thousands of opportunities within the course of a month that you don't take, that you have to stay out of. Okay. So to admin, it doesn't really matter, right? You said you look for specific things to happen. Okay, cool. Well, that means one thing, right? Go through the process of elimination. If you're waiting for a specific thing to happen, why is that? Well, I'm going to assume it's because you've tested your system, you've understood what moves make you money in the market, you've written out those rules for yourself and you've specified them. So those are the rules you wait for. So we have a system that is made profitable by the fact that you follow these rules. And now, right, think about what you're asking. You're saying, so even though I've done the testing, even though I've proven profitability to myself, even though I know I can make money given these things, I don't like that I have to wait for these things to make money. In which case I can look at you and say, you know, what the fuck are you doing then, right? Is your goal to be a trader and do it full time and make money by taking edge out of the market? Or, right, is your goal to be the Vegas gambler that wants to look to the next bright light and take something because, hey, I don't want to miss the move of the day, right? Yep, guys, ready? This is the honest truth. Here it goes. You're not gonna believe that this happened, but this Monday, okay, this is Monday right here, on this pair, which I haven't even looked at one time on the 1 minute, you're not gonna believe this, but I missed this move, and this move, and this move. And the truth is I missed this one and this one. And you guys won't believe this too, but I missed this one, and this is gonna sound really crazy, but I missed this one, and most importantly, I missed this one. Okay, and because of that, I'm gonna quit trading because I don't think this area is for me, and I'm gonna go figure out an edge where I can just buy and sell a candle every single day to ensure that I don't miss another move, right? So that's one way to go about your trading, but the other way is to just simply say, okay, there are specific things that I look for that make me money. If those things don't happen and price tends and delivers 1,000 pips, 1,000 points, 5 million ticks, it doesn't matter. I'll be here the next day, and if the market's still breathing, if orders are still coming in, there will be more opportunities for me to take under my set rules. That's it. The second you start to stray away from that, which a lot of people do, well, great. You might catch more moves, but you might make a lot less, if no money at all. Maybe you'll even go into debt. Well, not debt, but you'll lose money overall to the market, right? As most people do. Watch this cycle you designed become the next Wyckoff. It'll be called the mentfx schematic. Well, this is just how I see price, right? In a sense, what's happening here is a version of Wyckoff, if you want to call it that, right? But what we've done is we've actually defined what happens, even inside the action, not just randomly looking for a low to be maybe, hopefully, you know, a spring or a low, and then just randomly guessing and trying to trade into the highs. I wanted to create something that makes the most fluid sense in regards to how markets actually deliver, right? Because once you understand that, well, then the goal just becomes to look for those moments and take advantage of them, right? Hello all. Oh, here we go. We got this. So this was a 5 second or something system, you said, I think. Something like that, I believe. 5 second. And you're trading on what? Okay, you're trading meme coins. So you got to be very careful because unless you're trading extremely liquid because you're scanning for them and you're finding very, very liquid ones every single day, when you're trading a lower time frame, I do not think the R cost is going to be maybe 0.3. It might even be higher than that. But that said, if it is around that, then good. Perfectly fine. And I see your account size is very, very small. Yeah, you have a tiny account. Okay. Actually, like beyond tiny. So maybe this actually does make sense. But yeah, this is a phenomenal start to the testing, right? Just based on what I see here. Yeah, I mean, this is just easy peasy. Looks really good. Let's take a look at some of the stuff here. Very solid. Looks like it follows the cycle really well. Let's take a look at your validation when you're trading and stuff. Yeah, looks good. Trading into that redistribution, trades into it as it continues with the cycle. Okay, I can see it. Let's take another look at something else. Not zoomed out enough at all for me, so it's a little bit hard to judge. But it was a long. Okay, well, you know where the images are. So I'll leave that one up to you. But I believe it was right here from what I see. Yeah, maybe. This one's a little, I think this one's a little preemptive, a little bit early, a little bit high up too when you took it. But I think this one down here was kind of nice, or this one. Looks like an easy break even too. Yeah, looks good. I think it's a good start, and it seems like the results are speaking for themselves at the moment, so very solid. Priscilla says, to see if a market is liquid enough to day trade, do you look at average volume, and if so, what number do you look for it to be above to trade it? Well, so that's going to be very dependent on your actual account size and your stop sizes and how much you actually need to buy of the actual asset, right? How many contracts or lots or shares you need to buy of the actual asset for it to work. Now, the general rule that I've seen, that I've used somewhat, that I've applied is that you don't want to be more than 1% of the overall volume of basically, let's call it the validation time frame. So if your validation time frame is a daily or a 5, it doesn't matter what your validation time frame is, and the volume is 3.6 million shares, then you, for the most part, want to make sure that your given risk under whatever stop you're looking at is, what's 1% of that? 360K? No, 36K. All right, I think 36K. So you don't want to buy more than like 30,000, 40,000 shares. You can get a little bit higher probably, but you'll get some slippage, but that's okay. And the lower time frame your trades are on, the smaller this number basically kind of has to be, because, well, the smaller the market, the lower the time frame and the bigger the size you use, right? The more orders you're eating up on a lower time frame, which means the more you're getting slipped, right? Because if I'm trading something like this on a 65-minute, maybe I get slipped to here, but that's okay because, like, you know, it's not going to affect me big time. But on a much lower time frame, when you enter a much bigger size, you can get slipped. You know, you guys have seen it probably. You can get slipped a lot. So yeah, you can look at that for sure. Hey man, sorry I'm late. Yeah, I know, my bad, man. I did not mean to put the 12 a.m. there. Even though 12 a.m., just so all of you know, technically you guys were all late. Okay, 12 a.m. is actually midnight, right? So that was around 11 and a half hours ago, to be honest. So any of you that showed up 11 and a half hours ago were the actual correct ones, because 12 a.m. does not exist unless it's midnight. It's the very, very morning. It's the time where most of us are asleep. Lplate says, I only have 20 trades, but wanted to share my starting results. Been grinding hard lately as I've been off work. Good, that's really good. All right, Roberto, we got a long one. Let me take a sip of coffee before I read this one. Okay, let's see what we got. So Roberto says, hey Anton, this is an important question for me. It looks like it. We'll try to make it short. Sure. What will be your recommendation for this situation? Sure. I have really good trades. Mostly those trades are hard to manage for me, and I end up hurting my bottom line a lot because something that's supposed to be 1 to 5 plus with management ends up being 1 to 3. Okay, so before I read further, let's just think about your issue and think about it as normal humans, right? You have really good trades, but they're hard to manage, so you hurt your bottom line. So the question here becomes, right, the first question, the easy question, and this should have popped up in your mind, is if the management is very hard, but all these trades, for some reason, seem to be 1 to 5 or more, right, then you're still only securing 1 to 3, then clearly the easy answer is stop managing the way you're managing at the moment, wait till the trade's up 1 to 5 or more before doing anything whatsoever, right? Or 1 to 10 or more before you take partials or do anything, right? That's where the first thing happens, right? Because if it's hard to manage, but everything works out, well, cut out the middleman. Now it's not hard to manage because you're not managing, and then everything works out, and then you can take bigger profits, right? But let's continue. Also, I usually have a normal string of losses. Okay, but those are really big, meaning if I'm supposed to lose 200, I end up losing 500 to 600 for spreads or miscalculation of contract size. So again, two things, let's be honest about this. If you're losing a ton more because of incorrect calculation, that's on you and you need to fix that. Otherwise, you're not going to be trading for long, right? If you can't properly calculate or take trades with good, like proper math, well done contract size, you are going to lose all your money. It's as simple as that. If you need to work yourself up timeframes so you have the time to double check and triple check that the size that you're using is correct, good, right? There is no safety net or insurance on your accounts, unless you're like with a funded account, I guess, because then like you just lose what you put in, right? But there's no insurance in the world on your account for mistyping something. There are traders that click 1 0 too many and cost their firms an extra 100 million for that, or an extra billion for that, right? Funds literally lose money, huge money, and can go out of business on 1 decimal point. So you telling me you miscalculate contract size, that is something I can't fix for you. That's a simple, take more time to do it, change up the time frames you're on because you need more time to do it, or work with an intermediate person. Get someone to be on the computer for you if you can't type in the numbers properly or do it properly, right? Hire someone out to do that for you. Now, the other side of that is if you're losing 500, 600 for spreads or commissions, as you said, and that's also affecting your bottom line in a way that's making it negative, well, the answer's simple. You need to be paying less for your spreads and commissions, which means you need to be either trading other assets, much more liquid assets, waiting for very liquid assets, or upping the timeframes that you trade on assets that are liquid enough to support the kind of risk you want to have, right? Those are the only things you can do. So so there's a few things going on here, right? One is you're saying trades are running a lot, but I'm managing poorly. Okay, so we understood that what we can do there. 2 is you're making human error just on behalf of calculation. Well, okay, don't do that, right? Just don't do that. Next, you're saying you're losing a lot for spreads and commissions. Okay, I used to lose a ton on spread and commission, a ton. It was still worth it because I would make money, but after a certain point, it didn't become worth it anymore, right? Because a normal streak of losses would eat into profit big time, right? 3 losses for me was equivalent to going into over 8% of drawdown, right? And at that point, it was like, this doesn't make much sense because every single time I do this, I have to dig out of a hole, but my reward is limited. My losses are increased because of the way that spreads and commission work. So I started to look for changes in the way that I approach that, right? Okay. You said, anyhow, last week was really good in gold. And at the end of the week, I just lost a challenge in 4 losses. Okay. I'm really okay with the outcomes. Patient and fine with all of this, okay? But I'm starting to see that my system live is kind of hard to manage because work-related stuff. Okay, so again, let's try to give the simplest and most fairest approach to this, right? Because I'm not going to sit here and be like, oh, Roberto, everything is going to be okay. You will find the light and you will do well because that's what you're made for, right? Go through the things that are issues to you and actually ask yourself what it is you can do in regards to them, right? Because this just sounds like you're doing a memory dump of the things affecting you, but you haven't in any way thought, what can I do around it? So again, let's keep doing it, right? It's hard for you to manage because work-related stuff. Okay. So either, again, your work needs to change, the hours around work need to change, the hours around trading need to change, or the timeframes of entry need to change. Those are the only options you have. There's really nothing more, right? We can't sit here and just pretend like you have unlimited time in the world to do anything you want at any point, right? Because that's not the case. You are your own person, raised in your own environment, existing in your own version of the world right now that you need to course, right? And the lower system variabilities. Okay, so clearly a lot of issues keep stemming and reading from this 3-letter word that goes LTF, right? So maybe the change that is needed for you is HTF, right? Maybe that's what is necessary because it seems like around 1, 2, 3, it seems like 4 of the 5 problems you have, maybe even 4 of the 4 problems you have, are fixed by moving up a time frame or moving up to a higher time frame, even though it means potentially less opportunity, less money in the short run, and you have to wait a little longer to start scaling and make money on your money, right? But that's what it sounds like from what I read this, right? So again, I'm not 100% sure what the question is, right? Because all it seems like you've done is you've dumped 4 different kind of areas that are bothering you, some of which are complete human error that, you know, nobody has control over, but you. So the question is, how are you going to go about it, right? Last week was really good. I'm really okay with the outcomes. Patient and fine. Okay. Thanks. Guys, why do we even draw? Just don't draw. I'm only paper trading right now. Okay, good. Abo says, hey, Anton, I have noticed people here using more than one context time frame. As you can, and in some cases, people should. Can you show us an example of using 2 context time frames? Sure. Let's assume I'm trading a 65-minute. Let's say I'm trading this trade, and this is the entry time frame, and I'm happy with the way this looks. Usually, my validation would be a daily. I look at the daily, okay? I like where it is, all is good. Then a context normally could be a weekly for me. So I go to a weekly, okay? I like how it looks, and then ready for this? I look at a 2 weekly, and I like how it looks. Okay, that is how you use 2 context timeframes instead of 1. The entire course here from the very beginning, even the webinars, have showcased a version of using multiple context timeframes. This is known as, what I used to do is following multiple readings of the screener, looking at a few higher timeframes across the board, comparing them, contrasting them. Another version is, let's say the market is moving something like this and you're not 100% certain of it. Let's say you're not certain of the setup. Maybe the 65-minute all of a sudden becomes a version of context and you look to trade the 30-minute based on the actual move. And for you, you're now happy to trade the double MB formed by this here or formed by this here, like so, because it's clear on the 30 minutes. So all of a sudden, in this case, what has happened is the 30-minute becomes your entry, a version of the 65-minute becomes kind of a validation, the daily becomes a context 1, and the weekly becomes a context 2, okay? So you're saying, can you show me an example of using 2 contexts? I mean, the example is that you just use more timeframes, right? You've learned from the portal already, and I hope you've watched the portal, right? The one thing you've learned from the portal, very importantly, is that timeframes are only there to show us how the orders are moving in a market, right? To see alignment. So in that case, if you need more alignment, or if you like to have everything aligned, or you like to make sure that everything is just as clear as possible, then what you would do is you would add timeframes within that general scope to show you that, right? To see more alignment. Right? Or you'd use another time frame that's maybe closely related to another to see something that might not be happening on one. So for instance, if I know that in a validation that I want to trade, right? Let's say I really like how this looks right here. Let's say I really like that, you know, this started coming out of this area and I really want to trade this. And I think it looks really good. I think this market looks like it's ready to make a run higher. But then I go to a 65-minute chart, right? Well, in this case, the flush is pretty okay, honestly, because it came down. But like, let's say the flush wasn't as clear as I want it to be. I might step down to a 30-minute, right? Because now I've allowed the flush to become clear, and now all of a sudden, a setup that wasn't available before is now available as a double MB here, okay? So that's one way that you can use not necessarily 2 context timeframes, but how you can use multiple timeframes in your approach, in looking for something that you're already seeking for, right? Like, I already know I want to get a trade on this thing because of the way it's moved. I already know this thing is strong, this thing is looking good, and the idea now is, how can I get behind this, right? I want a good reason to get behind this. I could wait for this to maybe go sideways up here and then take it, and that's fine, or I could wait for a lower time frame that can now act as its own entry, where the 65-minute is now acting as a validation or a context to take this, right? Yes. Yes. So it's fine that you've noticed other people using like multiple time frames, right? So like, of course, that's a given. You can use multiple time frames, but I don't quite even think you understand what you're asking when you're saying, can you show me an example of 2 context time frames? All you're doing is you're viewing the orders coming into the market from the lens of basically this or this, right? And the question becomes, is that lens being appreciated by your current EVC, or are you adding in a few more to see even more alignment or to find a reason to trade, right? So some people might look for an alignment along, let's say like a 1 minute system, 6 minute, 60 minutes, something like this. Some people will be more than happy to trade if something along these lines align. Good. Some people will not want to trade unless even more is aligned. So I think I saw Dan in here, by the way. Welcome back, Dan. Happy to have you back in here. I know shit's been crazy, but really pleasure to have you here, right? So I know Dan personally for his system likes to use, let's say, alignment of the screener entirely, which means what he's doing ultimately is he's looking at the 1, 6, 60, 120, 600, 1200, 1 week, whatever, like that, right? And he's more than happy to give up all the opportunities that happen inside of this, potentially, and he's doing that because he's aware that his system does best when he sees alignment at least between, 6 out of 7 of these, something like that, right? And that's when he'll trade. So what he is using is he's not using 2 context time frames, he's using 1, 2, 3, 4, 5 context time frames to decide if it's worth to trade something, but he's doing it through a much simpler lens by basically looking at the models in the screener, right? He's going, okay, right, we have some red, the rest is green, I'll see if there's something there, right? What he's doing is he's basically looking at everything aligns for the most part, and I'm happy to trade given this alignment, okay? So that's how you use other time frames in regards to contact, validation, all that. Hello, good morning, man. Lukash. 2% complete, you better get to work. Gotta get to work, bro. Also, you just sent an image of stages. Is there a question? Oh, you did. Why it shows me that I'm only 2% of the whole course? Is it really 2% at the point where I'm at? Have you been pressing like complete or whatever, or completing the actual videos? Did I skip something? I don't think so. Okay, we look good. Wait, did I skip something? No, I think we're good. We are good indeed. Okay. So Starboy says, to get the optimal theory, Portal plus a 20 recent Webbies. Yep, that's always the best start. Or Portal plus since Webby 100. That's even better. Or Portal plus Webby 0. That's only 1 Webby, so no. The first 2 are yes. Thank you for answering the questions. I appreciate your thoughts. Yep. Yeah, so John, like, whatever I said, that goes, okay? I forgot some of the questions, but yeah. Okay, I remember now because I went back up to it. Yeah, I think the main thing that I might go back on right now is just that you can start actualizing your edge at any point, right? Just don't let it stress you out when the edge is not 100% profitable if you're starting to actualize it around a point of 100 backtested trades or 50 backtested trades or even 10, right? It's never a bad thing to go actualize. It's a bad thing if you judge yourself on the actualization of the edge, right? So like if you start actualizing the edge and it's not doing exactly what you want, then, and you're allowing that to affect the way that you're going to go about your own trading, then yeah, it's going to suck for you, right? Otherwise, perfectly fine to actualize. Hello, people. Very good. Good to see Dan in here too. iPhone says, that's what I learned on the past few days, backtesting, and even though I have the setup, sometimes I don't even take it because I don't like it or it's not clean. Yep, perfectly fine, and actually a very good thing to do. Not taking something because you don't like it or it's not clean in regards to what you're normally used to seeing is the best way you can go about things. Hi, my man Anton, everyone, I'm late. Thought it was around 12 a.m. So now, I'm coming back, okay? It's not even my mistake, okay? It is my mistake, but it's not even my mistake anymore. 12 a.m. is midnight, guys. You're all late. Any of you here for the 12 o'clock time, you're all late. Okay, 12 a.m. is midnight. I'm reminding everybody. It's about to be 12 p.m. in 12 minutes. It's going to be 12 p.m., not a.m. I wait for reaccumulation, then wait for the 50 MA to go sideways, and then I wait for an ICI that occurs above the MAs. Good, sure. Oh no, Mr. Ment, that's too many moves missed. Yep, we're done. We're done trading. Too many moves are missed every single day. It's no longer worth it, right? Like, for the guy that asked about the 1 minute thing, I bet you missed a bunch of moves on this thing this week. Oh my god, I can't, I know you showed up this day and didn't take these longs right here. This is a crazy miss move. This shorts, oh my god, don't tell me you missed these longs all week. Not good, not good. All right, I mean, listen, there's so many things you guys could have traded, right, to put it simply. So you can't be attached to the fact that you're gonna miss moves, right? Like, I missed this move here. I didn't trade this one. I wanted to trade it. I was watching for it. I just missed it. I missed it right here. This was a phenomenal move. And then delivered very, very well. You know? Now, I have my reasons for missing some stuff. Sometimes it's just because I don't take it, but sometimes because I literally just don't, I'm not just keyed in enough, okay? I don't have enough access to all the stuff I want to see, so I just kind of ignore something for a while. But yeah, that can happen. Lplay says, to be honest, man, you absolutely smashed it with the portal. It's changed my perspective entirely. Good. Very good. Chris says, I missed 17.839 R in wins on Bitcoin USD today. Oof. Just joking. There you go. OTM, what's up, man? He says, meme coins are mostly traded on the CEX, so the cost and illiquidity isn't too bad. Well, yeah, with a 10K account, but I know that if you have a much bigger account, and you're trying to trade that same normal size, 1% or whatever, on a lot of these meme shits, even when they are big on a given day, it doesn't matter where they're traded, right? It doesn't matter because you're still going to run into the same issues, right? Bluefin has very low spread and comms. I overcompensated with my R per trade cost. Okay, cool. Hi, Anton. I've noticed a few things, and I hope you won't take offense or anything to this. Okay, sure. So I studied the portal and the webinars, good. Then looked at the most addressed and top traders who are doing well for themselves and how they trade. Dan, King, Mitch, Cap, Jay, okay. What I've noticed mainly is they all trade 1 to 4 assets max. So that's already kind of a poor notice, right? Because that's not where your observation should start, right? What you should have mainly noticed about them is that they trade an extremely low time frame, which means that they might trade less assets at any given one time. Completely correct. Because an opportunity may and can be present close to every single day, right? So that's the starting point before we even keep going with whatever's here, right? All which don't correlate at all. Okay, sure. Most of them being NQ, gold, UJ, and sometimes the odd GU and oil. So again, ask yourself the question, why have most of them, or at least outside of, let's say, NQ, which is just well-known, big future, very liquid market, everyone trades it, why do you think it's been gold and UJ, and for some reason, the odd GU and oil? What do you think it has been that has moved them to trade, let's say, gold and UJ? Well, there's been a certain bit of screener material, or let's say there's been a certain outlook on a few markets over the last year or more in this mentorship, which has been following that bullish side on UJ since around back here, because that's the market that's contained that context. And same thing goes for gold, a market that I've literally told you guys is off to all-time new highs and will continue moving and delivering from around, when was it? Initially from here, and then from here. And then since then, we've been looking for those longs. So again, I don't know where this question is going yet, but one, they're not trading 1 to 4 assets max, they're trading a lower time frame, which means they want to look at less assets on any given day because there's a lot of opportunity that already happens. Two, the markets they trade. A lot of them have been markets that we've specifically had show up as very green, let's say on the screen, or just given the models. And as a result, that's why they've traded them. Okay, so let's keep going. Of course, not all of them subjectively trade those. Some trade all 5 and some just 2. Okay, good. So you're making that point. That makes sense. All in their own way. Okay, good. I don't understand why in many of the webinars and portal you talk down or shit on the fact that some people get used to only trading these markets. Okay, and this is where clearly there's been a disconnect between you listening versus what you're hearing, right? I've never shat on them or anyone like that for trading those given assets at all. I've shat on the people that have specifically went on podcasts, mentors that have specifically taught and continuously teach people that the reason they don't do as well is because they don't trade X pair or a certain pair or a certain market. And that has happened a lot. And and you can go back to some of these webinars where I've spoken about this, because I have. And I've said that if you trade a lower time frame, very low time frame, sub 1 minute, it's very likely that you are going to be trading 1 to 2 assets. And that's perfectly fine. And you could be set for life given those assets, especially if they're very, very liquid assets. Good. That's already been said. Number 2, I have said time and time again that the mentors and people telling you that you're not making money because you choose to trade NZD/USD over UJ, or you're not choosing to trade NQ over ES or whatever it might be, those are the people that have no idea what the fuck they're talking about. Because those people are understanding that a context is good on a certain market, but don't understand that it's not about the fact that it's the market name itself. Okay? So these are fine lines, don't get me wrong, but they are completely different from just what I'm reading here. And I'm sure some people can maybe back me up on that based on what they've heard from me, but I've never spoken down to people that choose to trade 1 to 2 assets. I used to be one of those people when I traded a 1 second time frame. I traded 1 to 2 assets on any given week. What I have said though, is that anyone thinking that they're making money because they're trading this asset, that's where they're gonna lose all their money. Very likely, okay? Very, very likely. And the reason I said that is because in the event that you are an NQ trader, and you think that you can only make money on NQ, what happens if NQ itself ever goes down, let's put it that way, becomes illiquid, becomes untradeable? Are you not able to maintain your profitability? Are you never gonna be able to trade again? Well, the answer to a lot of mentors out there is yes, because they truly believe that the only reason they do well is because they have this asset to trade. The answer to a lot of the people here, the people that you might have named by name here, are going to be fine because, well, they understand that the thing they're trading is the context and the story of the market in a liquid market. And they could do that across anything, okay? I'll keep going now. I understand the fact of you saying if the market goes choppy or sideways, but then there's always a second market they've understood or gotten used to. Or they could even stay away / out from the choppy one and wait. So that I didn't understand anything about. Appreciate a response. So that's my direct response to you. And you made it a direct message rather than a public message, so people couldn't even read it or respond to it, which sucks. But I'm going to see what people are saying here. Cyrus says yes. Okay, we get a little bit of backup. Good. So yeah, I suggest, Zach, that you message this, well, you already did, but you go forward by messaging like a public message so people can actually reply to it. But no, I disagree with the main premise of the entire message, because you basically just said what I've echoed many, many times, right? Which is that lower time frame, trade less assets, you're going to be completely fine. If you think the asset is the thing that makes you money, right? Specifically, you are fucked, because you're forgetting that the market doesn't move on asset names, it moves on orders. And if the orders are present in a given market or any market, and it's a very liquid market, those are the markets that are going to be tradable. When Bitcoin futures, which they do exist, become a lot more liquid, I would not be surprised to see the same people you maybe named or other profitable traders on lower time frames begin to trade only and solely Bitcoin futures or Bitcoin USD or whatever it might be. Why? Because we all understand that if it's super liquid, then you can get in and out of it with no problem. And if it has movement, which it will every single day, given a lower than 1 minute time frame entry, more than happy to have you trade that asset, right? Nothing wrong with that. But yeah, if you're on a higher, right, and you think that you're only going to be trading those things, you're just giving up money. And when it does go into choppier or harder to trade market, then yes, completely correct. Those people are fucked. Is it possible to open a 1% position in a huge account in the average firms? Depends on what 1% is. Depends on what time frame you're trading. Depends on the size of your stop loss. Lplate says, Ment, what do you think about fixed lot sizes? Go for it. If you are judging your reward based on how many pips do you make versus how many pips you lose, sure. You can use fixed lot sizes. I like to risk like a trader. I like to risk percentage based or R based on my account. I like to know that I'm going to be losing X amount every single time, not a random amount, right? Because when you're doing fixed, you're just looking to lose a random amount based on what you think you should be risking per pip. But yes, you can do that. Chris says, if I risk 300 per trade and from slippage and commission I lose about $50 to $80, is that all right? I mean, it depends, right? If you're still profitable, then yes. If you're not, then no. I like lower time frames, says Lplate, because I can jump on nearly any time and manage trades and leave. Swing trading makes me impatient and I can't stop checking my phone. Right? And for some people, it's the opposite. For some people, they hate lower time frames because they have to be there at all times, all day, especially if they're in a trade. Right? When I get into trade on a low time frame, I need to be there. I need to watch it. I need to manage it. And that can be the next 5 hours of my day. Done. For some people, they don't like that. And they prefer the swing where they get in, they watch it for an hour because they're just using that time to get in and whatever. They set their stops and they leave. And they can come back the next day and they do so for an hour and then they do it the next day and they do it every day. And for them, that creates more patience for them. So if you feel that way, that's fine, right? If you can't stop checking your phone because you hate being in a trade and you just have to keep watching it, either you might even be risking too much, maybe, who knows. But overall, yep, you're completely correct, right? For you, it would maybe make sense to be on a lower time frame because of that personality trait. But for others, they hate the impatience that comes with having to be there and be like, fuck, okay, I gotta manage this, I can't go anywhere, I can't go out, my family's there, but it doesn't matter, I can't go there because I need to be here for the trade in the scenario that I need to manage this. Versus a swing trader who will get in and then walk away. And he might even be in a trade for 3 months, right? Like, I spent over a month and a half, I think, in this trade right here on GBTC. When I traded this, I was in this trade for about, a month and a half, 47 days. When I traded UTHR, no, this one wasn't as long. When I traded FICO, no, not FICO, what was it? I forgot what it was called. ESS? You know, this thing? Okay, no. I don't remember which one it was, but I've spent, a month and a half in trades, and I don't have to look at them or think about them beyond clicking on them once, right? For me, the most work I do as a swing trader, let's call it that, when I look at a trade is, if I'm in this trade, let's just say I'm in this trade, even though I'm not. Let's just say I am, right? Okay, I get in it on this day. There we go. I got in it on this day. The next day moves, the next day moves, the next day. Okay, I'm maybe at break even now. Okay. I've done probably 6 minutes of work on this thing overall in terms of checking it. Next day I come back, I look at it. Okay, great, still nothing to do, nothing to do, nothing to do, nothing to do. Okay, maybe I'll consider like a 50% management somewhere here. Okay, nothing to do, nothing to do, nothing to do. Every single day, that's all I have to do. That's as much work as is going into my swing trade once I'm in it. Versus a lower time frame where if you're on this, and this is, let's say, a 1 minute chart, or a 5 minute chart even, right? Well, 5 times 20 is what? 100. You just spent an hour and a half watching this, waiting to see if you can manage this. Because this is an hour and a half of you having to sit there, and then you have to keep going, right? 2 hours, 2.5 hours. And you maybe get stopped out, or you're still trailing, which means that maybe 5 hours later, you finally get out of the trade, or it keeps going, and you have to keep on kind of being there for the actual trade, right? And managing it. So again, this is preference. What kind of person are you? Roberto says, thanks a lot for the answers. I was writing them with bullets. We'll take a deep dive, write the errors and potential solutions. It all seems related to what you said. Wasn't able to answer on the reply. All good, man. Thank you. All context time frame above 10. Got it, sir. Sure, you can do that too. Alex says, I still get a little confused with validation after watching the portal. Are you using the validation to see price come back to EMAs or for stage 1s and stage 2s? Because I always see you draw the stage 1s and 2s on entry time frame. Okay, so let's start here for Alex then. Let's say this is what you're looking for on the validation time frame, right? Where price does kind of come back to the EMAs. When that happens, and if I drew a box around it, and then I drew a box around the next leg, and then a box around the next sideways, and a box around the next leg, and then your question is, are you doing this to see the pullback CMAs or for stage 1s and 2s? What do you see when I do this? What's the first thing that goes off in your head what's just the first thing that goes off in your head, right? After you've gone through the portal material, what is this showing you? A version of. Good. So it's not that I'm waiting for a pullback to the EMAs or that I'm waiting for a stage 1, it's that they both exist synonymously. They both exist together, right? On a validation time frame, you'll get what we can call quicker based 1s and 2s, because these are going to be made up of what? Well, these become your major flushes, these become your big 1s into 2s, which start creating moves that then give you opportunities, right? Because inside of those stage 1s, or side of the large stage 1s, before the next stage 2, what do you get? You have the 1s and 2s that make up a tradable market. Right? Oh shit, I got it. There you go. Right? That's all it's been. That's all it's ever been. All we're doing is we're basically putting and layering this on top of this to understand where we are, right? And if it's worth to continue following. Black says, could you tell something about mentfx averages? Yeah, I made it available. You can find it online. Called it mentfx averages multi-time frame. You can literally go add it to your charts if you'd like to. All it does is you can set them to your validation time frame or whatever, like your daily or whatever your actual validation time frame is. And then when you're actually on your entry time frame, here we go. When you're on your entry time frame, let me get rid of this so it doesn't get in the way. You can see the average of the higher time frame. That's all. Very, very simple. Right, and you might notice where my trade on this thing was. I traded it right here. You can see where that occurred. Price comes to the 10, 20, or under the 5 on the validation time frame, and I got in thinking that I could get another move out of this. Again, it's the same exact thing. It's just instead of switching like this, you can now see where it is and how it looks like on a lower. Manji says, would you consider the buy stop of the MB before your BE on ARM a good one? If yes, any reason for skipping it or you just didn't like it? The buy stop before. This one? I mean, yeah, sure, I guess. There's nothing wrong with that too. You could trade that. It's a little bit weird, but yeah, you can definitely trade it. Either way, it would have ended up the same way, it looks like. Javian says, hey man, love you, bro. Okay. My question is, I spot great MB setups, but I'm starting to see fractal setups within those setups. Ignore them. Would you say I should be willing to take the fractal setups along with my original or keep it simple? They are different setups, right? After all, if you're used to one setup, but you're then looking at the inside ones, because like, look, okay, this is whatever, a double MB or a double MB, whatever you want to call it, right? Simultaneously, and you're completely correct about this, right? There exists a, you could call this an FFMB1 or an FMB1, and then a CS or FFMB1. And theoretically, this is also its own entry right here through this high, and then whatever, you get tapped in here. That is its own entry through this double MB. But this setup here is very different than this setup here, right? Those are very different setups in terms of what's happening. So you can be aware of them, you can see them because you are correct, right? Those are acting as MBs, those are creating fractal setups, and those might even be setups on a lower time frame. But you should definitely stick to the setup that you've actually been testing, right? And you're used to. Yeah. Raise your hand if you've been here from midnight. Nice. Myron says the second MB entry on the time frame is basically the same as an ICI entry, right? Yep. Remember, I just wanted to change the terminology to make it very easy to understand, right? But for the most part, yes. Right? That's usually what's happening on some level when that was taught. But that was, again, a very simplified version of it. 11 p.m. here in Vietnam, so I'm nearly in time. Actually, 1 hour early. Good. Nice. Abo says, do you think it's fine to add an extra rule for context time frame? The answer is already yes, but let's see what you say. So it's stage 2, and the last structural move, the low and high are not touching the 50 EMA. Price doesn't go below 1020. When it makes a flush and should bounce smoothly, otherwise just leave the chart. Sure. Again, you can think up all the crazy things you want, right? This just sounds like something that is generally taught, though, right? But it's going to come down to what? What do you think this is all going to come down to, Abo? Have you gone back and taken like even 5 examples of trades you've taken and then studied this, right? Like I can go back and literally study this and say if it makes sense or not, right? I can go back to a trade I took. So I took a trade where? Inside of here. Okay, I took this trade. Great, right? That's on a 5. So let's go to a 50 minute. What was happening here? Right, where was it? Price had already kind of shown huge strength, found itself on the MAs, moved higher, and then I entered. Okay, great. Right, so like in that case, sure, it looks like it fits kind of the rules you've written out here. Thoughts on my entries? I mean, yeah, they look like they follow the general cycle. Not my kind of entry, but yeah. I mean, it looks like this one worked out well. Where was it traded? Validation came up, started coming down. Yeah, sure. What are your thoughts on your own entries? Are you happy with the entries you're taking? Are you happy with the results you're getting? If so, all right, it doesn't really matter how I or anyone else feels about them. Because, you know, you're either profitable or you're not. Seems like you're in a fine spot, though. You know, my trade would probably be somewhere around here. I'll probably not trade this at all. You know, this is a hard kind of market for me to trade. You know, this is just kind of ugliness, but yeah. If you're able to spot them, good. Dan says, I'll trade everything. It comes down to the context of that market of the time. There could be a long time where I trade one asset and where I may be another long time where I trade another asset in the future. Yep, that's exactly what is very, very clear for anyone even on a lower, right? So back to kind of Zach's message, right? Like kind of listen to and hear what even our members are saying, right? Or what I've said before. It's just you have to make sure you're listening because you know I do draw a fine line between certain aspects of trading, and in some cases like this one, right? I've never attacked those kind of people for any of that, right? Because that's something you said, I think. You guys will be able to see this message in the actual recording because he made it private, which means none of you guys can see it, but yeah. All right, whatever. Skip that. But yeah, Dan's completely correct, right? A lot of the reason that Dan's been trading those markets you named are because those markets have just been showing up green. And if you know for the most part they might be going in a certain direction and you show up and you wait for them to do that and you have full alignment, well, great, right? That's one way to do it. Abo says, can you explain why those 2 points on gold are where you said price is going to start moving? Sure. At the time, it was because the screener was just overall bullish, and everything was showing up very, very bullish on it. But, let's go to the daily here. Just see. So yeah, it started becoming very, very green across the board, I think up here somewhere. So this is where we just kind of said, okay, gold's probably going to be in a good bullish bias for a long time, because every time the screener has gone full green on any given pair, it just has happened that over the next few months or weeks, it's just tended to go. And then we came down a bit for reaccumulation, started moving higher, and again, we were in a overall bullish market condition. That bullishness continued to hold itself. We started to play around kind of this 50, 10 and 20 all up in this area, and then, well, distribution never happened, right? We kept holding this as a reaccumulation, and as price broke out of this, well, it was clear that price just wanted to keep going. That's really it. Weekly was respecting the 1020, 1020, 1020, and now we're up here. There's really nothing more to it, right? The times we started getting super long on this thing were right here. All these moments here. And then I started to trade it around here. I like traded this, I think, once or twice, and then I missed this move. And then I missed all of this. But yeah, that's just how it goes sometimes. But the main reasons that we started looking at gold in those areas was literally the screener. That's when it showed up as overall bullish. For Abo, this is what gold looked like when it was right here or here. And then it looked like that again when it was around here. It had one red, which was on this one. It had a daily red, because at the time this was redistribution based on the fact that we broke down, broke up, broke down, and then started breaking up. But due to the actual move itself, and then particularly this move here, that set a precedent for accumulation. So then we started to play the validation time frame delivery, which is basically a version of this, or, which I haven't drawn in yet, but something along the lines of, it kind of starts that move, maybe it's going, and then instead of like this 3, it kind of, it might like collapse a bit, maybe build something up, right? So what you'll get is you'll get like the 10, maybe it does something like this, the 20, right, it does something like this, and then you have a 50, right, maybe it does something like this, right, which is exactly what happened here. Or in this case, it went a little bit more inside of it, but that's fine. And then price continues to, it fails the overall continuation of accumulation here for this move, but instead it goes into what we call true reaccumulation, reaccumulates all those orders, new orders start stepping in for buys, and then this counts as like a 3, like this, or as a new 1, because it's kickstarting new orders. And then you might go through that same thing again until a new flush out. That's exactly what happened. Price went through this reaccumulation, started to move, kind of had that as a 1, 2, maybe 3-ish, then fell off again. And then I thought this was going to start a new move higher, and it didn't, right? So again, I was still very bullish during this time, and then it failed again. And I started thinking the same thing, and then suddenly went, and that definitely reset the count. And then again, we went through like this 1, 2, 3, and now we're like in the extension of the 3 or 4, right? So now this is like probably that last move right here. Right, so right now the goal is probably to either just blow up for those that are already in the trade, or go through, a solid bit of reaccumulation, maybe even some longer term, maybe something like this, and once again start to move later, right? But at the moment, everything is continuously still aligning for the same thing. Deez says, anyone knowing anything about trading, know this, that person saying otherwise lack knowledge. What? I know. Anyone knowing anything about trading, okay, know this. They know this. That person saying other, I don't know, that Deez, I don't know what that means, bro. My brain just blew up. Shelling says we can trade anything with context. Very true. Kevin says, may I ask your opinion on GC? Use the 1 day for validation and the 1 week for context. Sure. Not my kind of trade at all. So this is more of what we call a momentum-based MB. And so this is part of the content that's going to be out, but for a momentum-based MB, a characteristic of momentum is that they're fit for much smaller runs, much smaller RR. They require quick risk off, quick partial. So when I look at this, I see a trade that should have been break even basically on this candle or on this next candle that was taking out that high. Because this is a momentum based MB, right? The accumulation came from here, right? You had MB, that started the accumulation. That's where you should have been positioned. Then it went through like a minor flush. Also, this isn't even, oh, GC as in GBP CAD, not as in gold. Okay. And then, okay. Yeah, so down here was the accumulation as it should have been. And then you can see, like even if I put on maybe 6 hour before I go to the 6 hour for you, right? You can see the flush out doesn't even get like under the 5. So this is a 5 EMA of the higher time frame. Doesn't get under the 5. Doesn't flush through it, right? So this is what we call this is basically a fractal stage of yeah. This is a fractal stage of a cycle delivery, right? So what you're doing is you're trading an entry like. So to put it like in the simplest terms we can, you started with like this major flush here, or this was the major flush. And then what you did is you traded right here, right? You traded off of a fractal, stage 1, or like you traded here, right? So the idea there is you need to be aware that breaking even faster or management faster is necessary if those are the trades. So when I look at this trade, right, all I see is if you got in this thing, let me do it this way to really get a point across. So let's do 2. Let's make this GBP CAD. Let's put it on a 30-second. Let's go ahead and replay mode this to here. Right, so what I see is you wanted to trade. Here we are. You traded the momentum-based MB of this, right? Where you had the flush started to create, accumulation MBs, but never validated. Started to create accumulation MBs, double MB, double MB, double MB, or double MB, right? Started that up. Those moves kickstarted this move higher. Then it had a very minor flush. So basically momentum-based one, pushed up, paused. So maybe you traded like here, FMB1, FMB2. This would be a much better trade if you sent me this, right? Just because it at least fits a little bit more characteristics of a double MB, but instead you wanted to take the momentum MB, which is this one, which is fine, but you need to be aware of what that means. When you take a momentum-based MB, you're looking for much smaller profits and entries, right? So what I mean by that is you wanted to get in through this. Okay, so you waited. Maybe you throw your stop like down there. Right, so this is where you get tapped in, potentially, through that MB buy stop. Need to grab another coffee, but I'll show you. Okay, because you're entering through this momentum, which means that when you're entering through momentum, you need to be aware that it's going to require of you, there we go, to be a lot quicker. Sorry, I got another coffee here. And I'll show you what I mean by that. Here we go. Let's let this play. So it comes down, whatever. You're looking for a little bit of strength, right? So already here, this is where you should be considering probably break even already because it's momentum based. The reality behind momentum based is maybe it has the move in it and then it collapses, right? But this is where you make your money, or there's just nothing else to do, right? Because it's not gonna work out. And then you get this. So at this point, right, that's where this is done, right? The trades break even if you're in this thing. Because there's no reason to have risk behind this, right? Because if this pauses now, that pause is likely to do what? It's gonna go into new flush out to create new move later, right? And then just, yeah, now it can just tap you out with that. There you go, and you'd be out of that trade and that's it. That's your whole trade played out. Because what this entry itself is a momentum-based MB, right? And a momentum-based MB requires you, well, to be aware of, and again, this is gonna be available by tonight or by tomorrow morning. I just have to process the videos for you guys. But a momentum-based MB requires you to be faster. They're fit for smaller runs. They're very quick, right? So I don't think this trade should have been necessarily a loss. Maybe it's okay to be a loss, but I don't think you understood that the trade itself was based on momentum, right? The trade you took here, just to give you an example, is the same as like taking, it's like taking this trade here, right? They share similar consequences. So the idea is this trade too, right? If you enter this should be a trade that at most probably becomes a break even as well, right? So again, you probably take this trade something like this, and by this candle, as it's literally moving higher, you're at break even on this thing because that's what a momentum-based MB calls of you, right? Same exact thing if you're trading this move here, right? By the time this move, right, has moved through that high right there during that live candle, you're moving this thing to break even. And then your money can sometimes get made through the fractal stage 2 delivery that does happen right here, right? And what happens is your actual setup looks something like this, right? You probably take your first partial inside of this candle, just like that. You secure like maybe 0.5 R, and then the rest you just let it trail a little bit under a candle low, under candle low, under candle low. This huge candle comes in, you take 50% off, you trail the rest of 50% of the candle, the next candle happens, you might even take another 50% off here or close full, or you just throw your stop here and the rest gets stopped out right here, right? And that's how you can make money through momentum-based MBs if you want to trade them, but you need to be aware of what you're doing, right? Because it seems like here, you're not aware that you're trading a momentum-based MB, right? Where is that double MB actually happening? Well, whether you wanted to trade it or not, the double MB really came from here, right? This was that double MB that's kickstarted this move. It might have not been tradable. That's perfectly fine. You guys are gonna hear about this and learn about it too. But that double MB, right? Because it's made up of any version of, you'll see it. This is part of the portal content. I don't wanna try to explain something that I taught there because it's just gonna sound really crazy. But this will be made available to all of you by tonight, likely, or by tomorrow morning. So, yeah. So my opinion on that trade alone, like just to get it out there, is that you entered through a momentum. This is momentum-based MB, which means you need to be very quick on these because, like, look where it is, right? Anton, do you still think Ethereum is going to zero over the long run? Yes, of course. It's not. It doesn't have anything special about it. So yes, over the long run, it will probably go to zero. However, right now, I have no idea. It could be doing anything. Let me go back to this, go like this, go like this, and go like this. Oh, still in line with what we thought, right? Yeah, I mean, there's nothing to do on this thing right now. Maybe it starts a little bullish move here, but it doesn't have any strength behind it. It's like super fucking weak. Yeah, I mean, over the long run, yeah, I think it'll go to zero because it's nothing special. It's not a Bitcoin. It's not any other crypto. It's just a copy paste code, isn't it? That's what most crypto is, except for Bitcoin. Javier says, bro, my mom just called me with her friend that day trades. Oh, okay, got it. Your mom called you with a friend that day trades, wanting to tell me that she made 50K in minutes from watching CNBC telling her what to invest. Goodbye. She's gonna be fucked. Yeah, she's gonna lose all her money. Very sad to hear it. Very not happy to predict it, but it's very likely gonna happen. You spent a long time with Nvidia. No, the move on Nvidia spent a long time, Shellings. I missed, right? I took the trade here, and then I closed most of it here after about, a month or like even half a month. The move should have been around like a month and a half, maybe a little bit more. Lplate says, I think it's because I just like to have a sense of closure when I walk away. Maybe in the future, I would be able to do a higher time frame approach when I don't spend as long working. Sure. iPhone says, can you go deeper on momentum-based MBs, please? Sure. They are the ones that happen higher up in price. For instance, this is a momentum-based MB. 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 You might notice something interesting about momentum-based MBs in reference to the E and the V. Does anybody notice anything crazy special about momentum-based MBs in regards to the validation time frame? And iPhone, yes, the portal is literally covering exactly this. So once that's out, literally in like tonight or tomorrow morning, you'll have it. They high up. Yeah, the momentum-based MBs are high up, but what's interesting is they are the precedent for an entry time frame to do what? To make accumulations. To create the cycle. Right? The momentum-based MBs of a validation end up being the creation of the full cycle with lower flushouts and MBs on an entry time frame. Welcome to multi-time frame understanding. And a lot of the time, what a lot of you are doing, especially like the guy that messaged about GBP CAD, right? What he's doing is he's saying, okay, the validation time frame for him, right, might have been doing something like this, very clear, right? Maybe it came down even more and then started to move. Great, it's good. Then he goes inside of it, right? And then what he does on the entry time frame is he says, okay, right, it had a nice flush out, it started those moves, and then what he's doing is he's entering where? He's entering on a momentum-based MB. So he's entering on this section of the validation on the entry. So when this maybe goes and then fails, and that's usually maybe a break-even move, what happens if he's entering here and it goes and then fails? He's taking a loss here because he doesn't recognize he's entering a momentum, which means the move that is to come from it as a fractal is usually going to be a small stage 2. That's what happened here, right? That's how fractals actually work in the market. Most people just pretend they understand fractals, but this is what fractals actually are. It's understanding how every single part of the cycle kind of interacts with each other. Anton, I remember a few webinars, you said possibly more cryptos added to Ment Funding. Any updates? Look out on the website in the next like 2-3 weeks. And again, they're not going to be they're going to be a different eval because they're on a different exchange completely because it's crypto based. But yes, keep an eye there. We're just trying to figure it out. What do you think will happen to the future of Bitcoin? I think Bitcoin has a place in our society. We'll see. Again, it doesn't matter what my opinion is because I don't invest in any of it, right? So I'm not invested in my opinion, which means that really my opinion is worthless. But even though my opinion is worthless and I have no money behind it to even prove my confidence, I think all cryptos that aren't Bitcoin will end up as zero because they're useless. And I think that Bitcoin itself has a place in our society. And I do think that maybe it'll go up, maybe it'll go down, maybe it'll just become a future currency, but I'm not investing on it or banking on it going up a ton just because it might become a part of our lives, right? Okay, guys, I gotta run in a sec. We got like a little Halloween night tonight, but before I do, I want to do one breakdown or two of some trades I took this week. So again, it was for the most part a very boring week for myself, just in terms of like wins, if you want to think about it that way. Just going into this, right? So here we are. This has been my general performance. Halloween is next month. I know, but it's like an event. It's like a, here, I'll show you. It's an event, man. It's an event, okay? It's an event. Don't worry about it. Spooky event. Okay. So you can see that, you know, for the last, whatever, for the last like 20, 30 trades, where has my curve generally been? Right? Sideways and break even. This is beautiful. I absolutely love having stuff like this because, you know, it at least adds to the things that I try to teach every single week, every single month, right? I look forward to going through normal drawdowns and break evens because it builds out the curves, right? It builds out what it's going to look like over the long term, right? This is around from 100 to 120-ish, 130th. So like this was what? 97. This is 120. Yeah, so about 23 trades in a row have kept me at that same level for the most part. 192, 197. So like maybe 5 are made in the last 35 trades. And who knows, maybe I go into more drawdown now. I love this because it gets to you get to see firsthand how normal plateaus, normal drawdowns, normal losses come as they come, right? And a lot of the time, literally, again, as I love to do, you know, let me read you my overall performance since the 19th. Ready? 0, 0, 0, 1, minus 1, 1.800, right? Like there's just stagnation. It doesn't feel like it's going anywhere, yet still it slowly rises, right? And then you never know when the next big win actually comes. John says, but your drawdown goes sideways, mine goes down. Does it? What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9. I had 10 trades in a row that went into drawdown. Full drawdown. Before I had a bounce back to break even. Right? Gotta run off myself. I'll see you, Dan. I'm about to get off anyway, too. So there's nothing special here. And guess what, John? I could have maybe had these wins first and then had these losses. And then maybe now I follow with 10 more losses. And all of a sudden, I'm in 20 trades of break even or losing, right? Maki says, in line with the breakdown, what do you expect from your arm on the 65 entry time frame now? So the way I think about trades is they aren't over just because I take a break even. If anything, they can become better setups, right? So like I took this thing and I was more than happy with it. But now when I look at this, right, yes, this kind of came down the refail or whatever, but there's nothing stopping this thing from like resetting up or maybe after another day, maybe creating some like FMB high to actually trade through, right? There's nothing stopping this from making an even better setup now or later. But at the same time, there's a lot of stocks that are doing like very well, while this is like kind of crapping the bed. So that's an important thing, right? That's something I keep in mind. But if I had to like figure out where this wants to go or what this wants to do, you know, I'm looking at this, I'm thinking, okay, maybe we flush out again and then we start building the MBs. Hopefully that's what happens, honestly. Because this was all one candle right here. I don't want to see this become an MB1 and MB2 like that. It just doesn't, it has to make a lot of move in one day for that to work on the validation time frame. So like I'd prefer this maybe pauses more and then builds an MB1, MB2 later, and then I can trade those, right? That's what I would look for. That's it. And I'm just going to wait for that. So this is one of those moments where, like if you took this, right, the next step is likely a flush. So even though you might survive the flush, I'm not here to be in this kind of move where like, oh, but maybe I live. Instead, I just wait for the next actual setup. But yeah, before I talk about my own trade breakdown, that was actually one of my trade breakdowns, right? I just took this trade right here. But before I look at another trade, like I've had a very normal set of break-evens and losses. It hasn't really gone anywhere. It hasn't done much. So just another reminder to get used to it. Fabian says, I'm a bit late, just joined, but I'm kind of lost in the C time frame. How does your C look when taking trades? Or do you generally look for the V? I look for V and the E for the most part. And I'll show you today my C for the trades that I took this week. Okay, so here's the 65-minute on ARM. I took this week. It took a break even. Here's what the validation looked like right here. right? Price overall makes this beautiful move, starts this potential reaccumulation or distribution, wasn't sure, kind of played around and then started a continuation. And I was looking to trade this to keep going. And then at the time, the context time frame looked like this, right? Price had just pushed back up above the 10 and paused. And I was looking to trade it higher. That's it. Do you ever use multiple validation timeframes? No, not really. Now, another trade I took this week was this CNEY. This showed up, I think, on a certain day, just with big movement, and it did. Yep, there it is. And honestly, looking back, like, maybe there was a way to skip this and trade a little bit later or something, but that's okay. All right, I saw this move come out, kind of went through like this 1, 2, and I was thinking maybe this makes a big like 3. Maybe it comes up, pauses, like maybe I get a move up there, and then maybe it just takes off and goes crazy. So I was thinking I could probably get behind this thing, and I'll show you guys what happened. On the 30-second entry time frame, right, we got this major flush. Flush was really clean. You can see if I put on the average of the higher time frame, which is going to be my 5-minute. 5. I need to make all this accessible through one button, just like that. Right, you can see we flushed beautifully through that 10, and then from there, literally went into MB1. I didn't trade this one, but then this MB1, MB2. I traded this thing right here, moved to break even on this candle, and then it just took me out at break even. And that was it, right? That was literally the entire trade. And from there, nothing manifested, right? It then made another move here and one kind of here. Those might have been small winners, but missed all those. All is good. I took another trade. I think it was on Duo. Oh no, I was watching this, but I missed it. I didn't take anything there. I thought I took another one on something. Capper. That's right. I took a small win on Capper. I remember this now. Oh, look at this. Oh, it's so beautiful. Look at this. Oh my God. This is what it looks like to understand cycles and understand stages to the market that you're in. Oh my, it's just so beautiful, no? Okay, nonetheless, entry time frame, we'll start with that one this time, and then we'll go to the validation. But very simply, entry time frame, we had this major flush. Price started to move from there. I didn't trade anything here. Started to move higher, went through this major flush right here, or just a normal flush. And then from there started to build like these weird MBs. I couldn't really figure out a place to trade them. I was like somewhat considering here, but it felt like arm, so I skipped. Waited, and then we got this like MB1. I skipped this just with uncertainty. So I thought this whole thing could be either MB1, MB2, or MB1, MB2, right? And then I traded it right through that high. Broke even on this move right here. And this started a beautiful move. I thought this was gonna go way more. I took off a partial as it moved higher into just strength, raw strength, 50%. And then the rest, I left it here because I thought this was really gonna flush. I thought this was gonna accumulate here, you know, and just go just for a crazy move. And nope, I got stopped at break even. Now, validation time frame, here's what it looked like, right? Very simple. Start up a move, went through this like kind of 1, 2, and then, you know, very clean move. Sideways, I was thinking, okay, I can get behind this. Maybe I get a move out of this. And then I thought this was going to be 3, and I thought this was going to be 4, and I thought we were going to get like a move like this, and I could take the rest off like up here. But then you can see price just failed down, and that was it, right? And then for the guy that asked about the context time frame at the time of trading this, here you are. Let me go like this. Here's your context time frame. If we were to use the 10-minute rule, all right? Context, very simple. Price gets above, kind of goes through, in this case, 1, 2, and again, you can see I kind of thought this was maybe 3, 4, so I really thought, whoops, I thought this was like 3, 4, I thought we were gonna get like another nice move out of this, maybe one more candle or 2 to like 13, 14, maybe higher, and nothing happened from it, right? But again, the context time frame is simply just this pause above the 10, 20. You could even add the 5 if you want here, just to see, but yep, just a nice pause, small pause, moving up, and then I tried to take it higher. That's it. And all of those, for the most part, resulted in tiny wins or break evens and nothing more, right? Like, this trade was nothing special. Here we go. All right, this trade contained nothing crazy or nothing special particularly. other than the fact that it was a normal setup that I normally look for. Price began to deliver, and yeah, that was really it. And again, for the guy from earlier that asked me about the GBP CAD trade, this is where I see your trade was taken. This is what I see as your GBP CAD trade, just so you understand, right? This is the trade you entered on GBP CAD, which isn't wrong, but you have to be very aware of what you're doing, because look, if I'm entering this trade here, what I'm doing, right, is I'm entering through that high, or maybe my stop is somewhere here, like under a low, and then what I'm doing is I'm either breaking even on this trade already in this candle, as it's up here, or at the latest, I'm breaking even as this candle gaps up right there. So I'm either taking a win, small win right here, and then taking a break even, or I'm taking an overall break even, and that's it, right? So what I see when you sent me your GBP CAD trade is you entered through the momentum MB, which is okay, but you need to be aware of what you're doing, because your entry was this, right? This is similar right here. Same thing, right? If you enter this trade, you should be at break even on this candle, if not already partialed. Like, this is where your partial is, probably somewhere in this strength, and then you're waiting for the rest to either go or break even, and then you get broken even on this trade, right? This is what it looks like to trade momentum, or the momentum MBs of an entry time frame, because they are the fractals, right? They are literally the fractal 1s and 2s, which means fractal 1s and 2s deliver for very little before the larger stage 1 happens to start building up new accumulation or failure, right? Which is why you can see I started holding on to this for the actual move, okay? Beautiful, beautiful. Yeah, so I had a relatively like slower week. Nothing crazy happened, mostly just break evens, no crazy runners, either very small winners, losses, or nothing else. Like, I took a loss on TGL and a win on it. I'll take a look at that really quick, actually, while we're here. Okay, I don't know what happened, but Jesus. What the fuck happened here? Yeah, you can see I took 3 trades on this thing. I don't know what happened here, but I'll just get rid of this. So I took a break even on one of the trades here. I think it was this one here. Then I took a win, small win on either, I think on this trade right here. And then I took a loss on this trade right here, right? So I traded this right here at the very end, traded through the high like that. And then I just took a very, very easy -1 as this took me out. And again, like, this could have just been an easy runner as well. Like, I have no idea what it could have done, right? You can see where it was, right? It kind of started the move, kind of went through this 1, 2. I thought we were going to just, you know, I thought we were going to kind of trade through all this and go wild. You know, this is what I was trading on. This is what I was banking on. But nope, just failed and then became a liquid, so I stopped looking at it. iPhone Nelly says, I'm getting really confused on identifying a major flush and a normal orange flush. Yep, that is because there's no particular way to decide which one it actually is. There is just the overall model of delivery, and then you partner that with the other tools. So I really suggest going through the portal content, all of it, including the example one, because that sounds like something that is tackled with and dealt with in a way. Okay, because I think I speak about that directly. So maybe you haven't finished the portal yet, or haven't, you know, I don't know if you have or haven't, so I'm just guessing, but it doesn't sound like you have yet. But yes, you're correct. You will be confused because you put together tools. You don't just hope that one time frame falls into line and you can just predict it all, right? I understand that this is likely a major flush on a lower time frame because, why? Because it's the first time that the validation time frame kind of paused and started making a move higher. So I know that we're going to be in one of the orange flushes here, or major, but I know that we're in that starting point of a potential move. That's why I traded it. That's why I got a break even, rewarded, and a loss, right? Overall, this worked out to being like a small loss, I think, because of commissions and slippage or whatever, or slippage primarily. But that's okay because, you know, that's the game. Sometimes I make a little bit on the wins. Sometimes I lose a little bit on the break evens. Sometimes I make a little bit on the break evens. Like, it's all over the place. So it all works out to being the same, but that's how this specific trade went. 1W says, I realize portal material is mainly a lot about studying context. Yep. Like, as in the story of the market, not the context time frame, right? Yeah. Yep, exactly. You're completely correct, right? One of the main things that you hear me talk about, especially when you start the portal, is what? right? It's let's understand what creates movements in the market first and foremost. Let's understand that we are viewing orders, we're not viewing patterns, right? Second most. And then let's understand how we put these things together to start studying and understanding where we are in a move, rather than if you see the RSI cross 20, you know that's a major flush. If you see the candle make a black candle and a small white candle, you are definitely in a good validation. Like, this is not how the market functions, right? The market functions as orders come into it. The orders come into it in a little bit of a unique way every single time, but they follow the same precedent, right, for what it's doing. Once you start understanding how those orders come in, how orders either sustain themselves and hold themselves up, or where you are in the cycle, it becomes a lot easier to start taking on risk, right? Because you now have confidence behind what you're doing, and then to manage that risk into reward or into the normal losses and break-evens that then lead to reward, okay? Fabian says, interesting, so you always look for a small sideways action on C. I don't look for it, but yes, it happens. So it's something to keep in mind, because when you see that happening, you know what it's building up, right? And then if your VMB build up breaks down and fails, we can expect a longer term stage 1 or choppiness, and we would look to stay out and wait for it to confirm. Yes. Or if it's very clear market, you can trade down into the major flushes, right? Because you have the ability to get into the MBs to confirm itself. And trading in a stage 2 of a context time frame would be seen as momentum based entries on V with flushes on E time frame. Yes, but it can also have major flushes on the E. But yes, all that is correct. Black says, any thoughts on MA crosses? I noticed they work pretty well. You can use whatever you want. I don't necessarily use crosses myself. If you've noticed they work, go for it. Okay, write down the things you noticed, and you can look for those as rules for yourself. Maki says, what I am doing sometimes is tell myself the story of the market like talking to someone. Yep, I do the same thing to myself, right? I'm literally going 1, 2, 3. Okay, it's 3, which means it could be making one more stage 1 to make a stage 2 that kind of blows this off the proportion. Is the entry time from in a good cycle? Let me see what it's been doing. Yes, it went through a flush. Yes, it built up MBs. Yes, it's in accumulation. Yes, it's in another flush. Yes, it flushed down to the validation time from MAs. Yes, it's building MBs. Yes, I want to get behind this, right? I'm constantly telling myself the story of how the market or how the money is coming into the market. Otherwise, what the fuck are you doing, right? If your approach every single day is, okay, we hit the support and we made a doji, so I'm going to go long, right? If that's your story every single day of a market, then you're going to be trading a lot, but you might not have the kind of results you want. But then the opposite side of that is, if you've studied moves and you ask yourself the story that created that move, that's what you can now look for every single time, right? Kevin says, thank you for the answer. I did not think it was momentum based. Phenomenal work on the portal. Thank you, man. And yes, Kevin, this next little section of content should help you a lot. Like, you guys can pause this after you watch this in a video and read it if you want, right? Because, it's all here. But we're going to go over the characteristics and momentum / accumulation based in the upcoming portal material. So I'll get this all out to you guys in a second. That's my main, it's my goal. It's my goal. Fabian says, thanks. If I can ask one more, sure. Could you explain how you were not interested earlier in TGL? Since it all looked kind of similar to me going sideways. I think it was just because it didn't have enough volume, I think. I think it was just very illiquid, and then money started coming into it. I think that's literally it. But you can see when I started trading it, right? When I started trading it, it was already right here. Right, so the only time before this to trade it was like maybe here. And that was like the first time it went sideways, which, as you can see, might have even worked out. So, like, I traded it first here. I mean on the loss on the entry time frame. Oh, inside of here? Okay, let's take a look. So, in this case, right, I guess your question is probably like, why don't you enter here as an MB? Okay. Okay. I think it was just because it hadn't paused enough for me. I was just uncertain. You can see the time that was happening at was just big up candle, huge down candle, down. I just wanted to wait a tiny bit, I think, is all that happened. I think that if you did enter this, I don't think it's wrong. I think this trade still makes sense, and based on how you manage this, maybe it even turns out to be a break even. Probably not though, right? But yeah, and that's the only one that's available, right? Like there's not another one until this one. That kind of makes sense. So Yeah, I think this is just personal preference. Where were the higher MAs? Yeah, I mean, listen, if you traded this, I'm not against it. I think you didn't do anything wrong. I think I just missed it or wasn't looking or I was just like, I'll give it a little bit of time when I saw it move the way it was moving, right? I think I just said, I'll give it one more candle. And I think as this candle came in, I then checked it and said, okay, there's nothing here yet. Don't you think the MAs are a bit choppy in the range? No, I don't. I think they look fine. Yes, they were a bit choppy here. And if you notice, I didn't trade anything here. I ignored it, right? These were clean. Then it became choppy. And then what happened? It flushed. They started to become like kind of clear and then it accumulated through them. So I looked to trade it. 1W says my context is literally the monthly. The EMAs have to be rising above the 10 and 20 and literally that's it. Once that happens, it's literally free money. Yep, exactly, right? And what's cool is if you look at any of the markets we've been trading, like gold, right? So back to the guy that was speaking about gold, notice when we started getting long in this thing, right? Think about the arrows on this thing. Look at where they are. Price had just started to trend or started to make moves above the 1020, 1020. Look at this. Look where price is now. This is where we are now off of that initial. But you're completely correct, 1W. It's a great rule to have. And what's really cool about that rule is if you write it down for yourself and remember it, when the screener is actually made available, right, one of the things you're going to be able to do, if you see it here, one of the things you're going to be able to do with the screener is you're going to actually be able to set up the MAs and the look of the MAs you want on your given time frames. So you'll be able to actually create basically a trend profile for yourself between the stuff you actually want to see. So it's going to be really helpful in that scenario too, in that sense. Okay, guys, listen, I'm gonna wrap it up now. I got to go to the bathroom too. That's why I got to wrap it up too. Okay, I'm gonna have to be real. But listen, guys, okay, thank you so much for showing up today. Thank you so much for everyone that was able to drop a question, to talk, to chill for a bit. And listen, I want to wish everybody a very good Sunday, a happy Sunday. I got stuff to do with the fam today. Got to hit some Halloween parties. But I will see you all in the trade talk. All right. Please continue killing it. Please continue doing well. I love seeing it from you guys. And I look forward to talking with everyone this week. All right. Peace, guys. Thank you so much.